This conference will now be recorded.
Hi, it's Patrick from the Adamas Principle. Apologies, I'm flying solo tonight. B is very poorly. He's very sick. So hopefully B will be watching this. So I'll get well soon. Hopefully he'll be with us next week. But it's going to be a quick one today, and I'll just go through some of the charts and some of the levels I've got, but also some of the some of the topics. The first one we've got is will the real J Powell stand up? Slightly wanting to kind of court controversy a little bit, and it's all to do with an FT article which I posted on my previous feed, in the sense that are we at a pivot? Is the Fed now at the start of a cutting or an easing cycle? And what do they know something? So I just want to I was on the investing channel on Friday and I spoke about this briefly on that, but I just want to recap. Sometimes it's good to have a timeline on Fed rhetoric, Fed rhymes, Fed speak, and coupled with that with the money markets. So I want to just do that and run through that quickly with you, because I think it's important to get the framework, to get the backdrop. We try and make sense of macro here every Sunday night, and this is what I try and do. So last October, this is in the US, data amazingly pristine macro picture. You had some Fed bashing from the Trump. There was some talk questioning the independence of the Fed. Will they blink? Will they buckle under the bashing of Trump? We all know they're independent, but just saying. Then you had comments from Jay Powell saying that we were way below neutral. And neutral to me is between 2.5 and 3.5% on the Fed funds rate. Then there was a Clarida flip-flop, which basically means mixed messaging from Powell and Clarida. Then there was from way below neutral to the flip-flop. Then there was just below neutral, which caught everyone off guard, slightly, very dovish in the context, because, context is important. Then there was patience, then there was data dependent, and that's where we stand today. Nothing, apart from housing in the US, nothing is really tanked in the data. So why are they being so dovish as in last week? Do they know something? Well, I think they might do, and it's China. That's my my hunch, my gut instinct. I've been doing this quite a long time, and it does kind of add up, coupled with three central banks half blinking. Okay, so you've got Draghi, who had a dovish tilt. You've got the PBOC, which is a triple R cut and a cheeky injection, and then you had a dovish FOMC. All together, I think it's the global slowdown or the global growth story cracking, with, in addition to that, with which really started it for me was the big miss on Apple. Not just the miss on Apple, but also Caterpillar, but the miss on Apple citing China. Then you had sub 50 PMIs in China. So all of that I'm considering, coupled with data in the US not tanking. Okay, CPI 2% headline around there, core around the same. The mean on the 12-month average is 2%. It's not going south. Oil tanked. It's done a bounce now. But, we're not talking 1.5, 1.6, 1.8, obviously Europe has problems itself. Germany GDP revised down from 1.8 to 1%. That's 0.8 off. That's pretty shocking. 1.8 was shocking to begin with. So all of this, it's on my radar. So I guess, the article, if you look, I photocopied it. It's in my last feed. I'll post it on on the feed after the last one. Sorry. And it basically says, and I'll read it out. So I've got to get a bit closer. It says the US bond market is doing more than telling the Fed has paused. It's suggesting central bank is at the very early stages of a pivot towards the next easing cycle. This week, yields on the 2 and 5s dipped below 2.5%, the upper bound of the current overnight Fed funds rate. Now, this is a little bit strong. I don't think we're there yet. I don't think we're going to have QE, but I've been questioning this, and I put it in the post saying if it walks like a putt, talks like a putt, maybe it is a Fed putt. That's something we, 2 months ago, I would have been laughed at if I mentioned that, but now maybe not so. Just to keep on your radar, so I'm a risk bear. Beat is a risk bear. I've got a question. I've got to factor in as a trader. I've got to factor in all of that to the global macro view. I've got being a risk bear. You had, especially after non-farm, you had a good headline, weaker earnings, unemployment slightly ticked up, so pretty mixed really. I would just go with the wages, which were 0.2 lower month on month. They were in line year on year, 3.2 I think it was. Not that great, although it was a stonking headline, but dollar didn't do that much. It was pretty choppy, pretty mixed. However, this brings me on to the next topic with yen. Yen pairs got lifted at late London session into sort of New York session. Dollar yen, the big recipient of that. Euro yen was firmish. Aussie yen, yeah, but dollar yen was the big one. And I think the high, let me just get this up. Let's just have a look here. Here we go, dollar yen. Yeah, 109.50, 110, the big figure, very big level there. Expect some tough resistance there. I don't know why yen got hit. I heard some desks talk about some more easing in China, but I'm not sure. Bit of a weird move. You would have thought risk on would have happened on the FOMC night because they were dovish, but stocks rally. Yields on Wednesday didn't really do much, and it was a dollar story, not a risk story. But late close on Friday, we had risk on some proper, all the yen pairs getting lifted. This is dollar yen. Let's just look at euro yen. Yeah, I mean, it's firm. It didn't lift like dollar yen. Obviously, you had a bit of a dollar story a little bit there as well. But let's have a look at, so Aussie off its highs, Aussie yen, yeah, firm. We broke 78.30. So that's the kind of a bit of an oddball, really, a bit of an odd one towards the close. It could be nothing, just could be flows, but something to bear in mind. What next for China? So I told you this is going to be a quick session. So we're nearly wrapping up. I'll take you through the charts and some of my sort of strategies and where I'm sort of looking at putting a trade on in a minute. But where next for China? Well, I just think, looking at all of the considerations I've outlined, I think the market wants some risk. I just feel it. I can taste it. I just feel it. And if this half blinking by the three central banks continues, and I say half blink, I mean in a dovish tilt, slightly dovish. If the market thinks that it's going to be a full-on Fed put or central bank put, then risk will fly. Risk on pairs will fly to the moon. Stocks will rally. Dollar will probably get hit. Yen pairs will rally. They'll be on a tear. So you don't want to get in this way. but we're not there yet. But it's interesting to see that FT story. It's interesting to see. I've been talking about this for a couple of weeks on making sense of macro. I've been discussing it with Beat. It's been there. It's on my radar, and it should be on your radar even more so. I try and Beat certainly taught me this. Try and think 3, 4, 5 moves ahead, have different scenarios play out. So when they come to the, slightly be ahead of the curve, if you will, when they come up and make it and matter, you're not cold to it. Next steps for China, I don't know, to be honest. But what I will say is, they're deleveraging. $1 at 7, that's still going to stay there. If that breaks, you'll get a massive risk off dollar move upwards. You'll get outflows. Equities will be hammered. Just bear that in mind. That's not really going to happen, I don't think, anytime soon. Beat's in agreement with that, obviously, or I'm in agreement with him because he highlighted it first. So I don't know really. I mean, the next step for China, I think, is the tariffs. If that's window dressing, which I think it will be, you could get some relief rally on risk. I still quite fancy selling into risk rallies, but very small. I'm not completely convinced because I feel the market is sniffing and wanting and tasting a Fed put eventually down the line. I don't think we're there yet, and I think it would be carnage if there is that QE word mentioned. But there could be a rate cut mentioned in not just the Fed, but Draghi, ECB's got a single mandate of CPI. So yeah, that's just my view. I think China's a big problem. I think it won't be a hard landing, but it will unravel a little bit. But I think the central banks will catch it before it gets, because don't forget, we've got muscle memory from 2008. That's it on the topics. Sorry it's short, but there you go. I hope it's been useful. My name is Patrick from the Adams Principle. This is Making Sense of Macro. I'm going to really quick squiz through the charts and what I'll be doing. Euro dollar, very sticky, very hard to trade. Got Italy, BTB Bund spreads widening again late Friday, or is it midday Friday? But Italy's not out the picture. French protesters, the yellow vests not going away anytime soon. Italian GDP off, like you can imagine. And then, there's Brexit as well. That's what's worrying the euro dollar. Then you've got a dovish Fed. So that's sticky. I mean, they're both net negating each other. So that's why you've got a range bound, I would say I quite fancy selling the 200, which is 115.60. Probably get stops above 115.10. You might get stops, and then that's a kind of high as well. 115.70, 115.68. That's not a bad little level. But like the famous words in Wall Street, bulls make money. Bears make money, pigs get slaughtered, so don't be too greedy. Right, that's my euro dollar. Dollar yen, 110, the big fig. I'll be selling up there. Quite nice. The mother of all levels is around 112. Euro yen. Again, I'm 127. I'm not really going to be touching that. There's a little level there at 120, 126-ish. It's all right. 127 I really fancy. Aussie, 73.30, the mother of all levels. Selling into that is what I'd be doing. Aussie yen, yeah, about 80.40. Let's have a look here. These two big fat moving averages, 80.20 to 80.50. Very nice. Cable, I'm not touching with gloves. So moving on, euro sterling for the same reason. Dollar CAD, crazy loony, no thank you. Just a quick one on Kiwi dollar. you're a Swiss. No, do you even touch that? So I don't know why I've got show. That's forward, so just ignore that. There you go, it's done. Please leave comments if you want. If you like what I'm saying, if you disagree, if you hate it, if you just comment. You know, it's really helpful for me. Tell me I'm wrong. It makes me better at my job. Beat will be hopefully with us soon in the middle of the week, or Monday, sorry, because you know, we miss you, mate. So I hope you get well, Beat, and you know, that's it from me, Patrick Reed, the Adams Principal. Thanks very much. Okay, pause that now.